So I just want to point out that for all participants, this will be recorded. If if you have any issues with that, that is fine. But you can leave, but you will be able to get the recording. Just an introduction to New Automotive itself. It's been in existence now for over 4 years. Its mission is to support and accelerate the switch to electric vehicles, obviously with a broader theme of reducing emissions and globally, because transport emissions are the second highest emitting sector, but also looking at the opportunities and economic opportunities that it shows as well. So we've been working that for the last 4 years. We use a variety of data products and data reports to influence public and private corporations in that transition, part of our mission. And each month we have a number of products that we deliver, which like the Global Electric Vehicle Tracker. We've got the electric car count, electric van guide, and for those ultras out there, we've got the electric heavy goods vehicle guide as well. So there's a rich resource of information that we have on our website, and you can get access to. It's all publicly available. It's all free. And if you really want to go deeper into this, you can email us at general@newautomotive.org, and you will be able to get the API. So you can sign up to monthly emails as well. You can view our country profiles that are on the website. Each country has gone into in detail, but along with their policies and the current data. You can run your own analysis, and you can, torture the data as much as you want to have a look at it and come to your own conclusions, and you can get the API. What we intend to do, we are an independent organization. We're funded by a number of foundations like Quadrature Climate and others, and therefore it allows us to put this information out there in an independent and objective way. As David will touch on in his discussion, we attempt to myth bust, tackle some misinformation, disinformation about the growth of EVs or lack of, which is not the case. And we also try and provide this data as quickly as possible. So, for example, our monthly updates on the UK electric vehicle data comes out almost instantaneously after the end of each month, and so therefore you're getting that access as fast as possible, independently, to make business decisions much more effective. And that allows me to then start to pass to the two main speakers today. David's going to cover the sales developments in the major markets, which will be a positive story, despite what you might hear in the press. So things like charge point myths and misinformation will be tackled in there, and it'll be a global overview, touching on some key markets. And then Ben is going to be talking about policy developments and what's around the corner. And the picture tells you that what one of the focus areas may be, but we'll also be looking at the EU and China as well as the US and what's potentially likely to happen around the corner. So there's a bit of a future scanning as well as looking at what's currently happening. Right. What we will then, with time permitting, when we get through that, we'll have some Q&A where people might be stimulated to discuss this. Obviously, all of this will be available, this recording, etc., and all the other products will be on the website, so you can pick up on that. But please feel free in the Q&A option on the webinar to put in your questions. We'll try to get through as many of them as we can at the end, and if we don't, we can always follow up with you. We've got your details, and we'll then wrap it up with just summarising where we've got to, and then look forward to the next presentations. Okay, I'll stop there, and I'll pass to David to introduce himself and take you through the current developments of EVs in major markets globally. Thanks, David.
Thanks, Harry. Yeah, so just as Harry said, I'm Policy and Research Manager at New Automotive, and so I'll be giving the kind of global overview and diving in a little bit more into charge points, especially in the European context. So, the forecast. So starting with this first slide, the forecast has been wrongly made many times before, but it does appear actually on current this time that the rise in total battery electric sales is at least temporarily slowing. Q3 of 2024 sales are up 4.6% on last quarter, but they're only up 0.6% on Q3 of 2023. And that latter increase is the slowest since we began collecting data. However, there are quite good reasons not to be too downhearted. Whilst the EU is struggling, and that's a large part, plays a large role in that slowdown, it looks like it's turning a corner. Meanwhile, sales in the US, which accounts for 22% of car sales in our study, and in the UK, in fact, are booming. And China, which accounts for 40% of the cars in our study, is also seeing a steep rise in sales of new vehicles with a plug. And furthermore, sales of petrol and diesel cars are definitely not on the verge of making a recovery. So the next 3 slides bring that out. This is showing combined sales of battery electric and plug-in hybrid vehicles. And so we're including in this things like range extended battery cars as well. And those are up 12.5% on Q3 of last year, largely driven by the near doubling in 1 year of plug-in sales in Asia, which is represented in pale green. It's the second bar up from the bottom there. And that's principally in China. So whilst we at New Automotive have tended to see plug-ins as only being very much like an interim solution to decarbonisation, the emerging PHEVs do have longer ranges than ever before. It's an average of 90 kilometres or 56 miles in China, 80 kilometres elsewhere, according to the latest Bloomberg insights. And in the hands of a consumer who's willing to keep the battery charged, that obviously has the scope to drastically reduce greenhouse gas emissions. Going to the next slide. Yes, so pure petrol and diesel cars, on the other hand, as I said, are not staging a comeback. All of the bars shown in this chart dating back to 2022 are down on pre-COVID levels, and the decline is continuing. So from Q3 of 2023 to Q4 to Q3 of 2024, the decline is just under 8%. Sales are down 4% in just the past quarter, in what's typically quite a strong time of year globally for new car sales. And you can see also some of these trends in the market share of EVs. This slide is showing the data for battery electric. So Europe's sales are actually bouncing back now quite significantly in blue there in the middle on previous quarters, although they're still down slightly on Q3 2023 levels, which is principally driven by weaker results in Germany following the withdrawal of incentives, as well as some wider kind of policy uncertainty, which is being driven by a very live policy debate, which Ben will talk about a little bit more in his section. But market share is holding up in the Asian markets, which includes the very diverse Chinese, Indian, and Japanese markets all kind of added together there, whilst the market share in the Americas hit a new all-time high in the most recent quarter. So that's battery electric. If you put plug-in hybrids into the mix, then the market share in Asia of vehicles with a plug is at 35%, which is now an all-time high as well. We've come a long way, really, from the first half of 2022, when European and Chinese markets had pretty similar market shares of vehicles with a plug. Both have gone up, but Asia's, in particular China's, have gone up much more. So yeah, we'll quickly dive into the data for a few areas now, beginning with the US. The first thing to note is that US EV sales have always been significant, but they're more important than ever in this current context. So with Q3 being its best selling quarter of all time, sales of battery electric vehicles in the US exceeded sales in the EU, which we believe is the first time this has happened. It's certainly the first time since we began gathering data. We do often risk downplaying the extent of the transition in the US, given the lower market share of EVs there at the moment. But the strong growth and the overall size of the US market means that for now, at least, it's second only to China as a kind of economic unit driving decarbonisation. Second observation here is that the market share of all battery vehicles is now rising. So Q3 saw pure ICE vehicles drop below 80% for the first time, thanks to strong growth in full hybrids as well as plug-in hybrids and battery electric. Ben will talk a little bit more about what the upcoming election might mean, but it's worth noting on the long view that more than half of the market share of battery electric cars actually predates the introduction of the Inflation Reduction Act, which is when the kind of incentive regime really started to crank up in the US. So we can therefore hope that at least a good chunk of those sales will survive the gutting of that act, which one of the presidential candidates is talking about. But this is the third observation, which is a bit more downbeat before we get too carried away, that the vehicles on US roads compared with other markets are far more dominated by ICE vehicles, by pure petrol, especially petrol, and it's a very small amount of diesel vehicles. This shows the EUS's market share of those vehicles compared with the respective members of the EU. You'll find that the US is 25th out of 28, ahead of Slovenia, Czechia, and Bulgaria, but behind even countries like Latvia, Slovakia, and Croatia in terms of the move away from pure gas vehicles. So we'll turn to Asia now, and especially focus on China. If I can move to the next slide, then China bought more than 2.8 million vehicles with a plug in Q3 of 2024. That's up 22% on the volume bought in Q3 of last year. Almost 2/3 of those are battery electric, just over 1/3 were plug-ins. Like other observers, we're not really yet clear on the reasons for this sudden acceleration in plug-in hybrids, almost doubling from Q1 to Q3, or whether that kind of rush will continue. It could well be a sign of sales breaking through into new parts of the Chinese market. And when we say new parts of the market, there could be regional parts of the market, or there could be kind of attitudinal parts, people with different perspectives on the transition. Those new bits of the market could perhaps have more concerns about charging infrastructure, in which case the demand in FEVs might well be sustained unless we see some kind of rapid catching up in kind of confidence about kind of the charging network. But it might also be partly a result of the kind of recent economic stimulus from the Chinese government, which has been pretty blind in its kind of incentive-based approach to the differences between FEVs and BEVs. If that changes and incentives retilt more towards BEVs again, then we might expect the growth in plug-ins to be slightly more limited. Petrol sales are definitely down, not out, as I say there, but down 19% on Q3 of last year. That sort of shift is really likely to reduce global oil demand this decade. And there has been speculation that it's already shifting it, which is why we've seen such a muted response in oil prices to the kind of to the current disturbances in the Middle East. And here we show just the trends in market share for completeness. It's pretty hazardous, I appreciate, to make straight line projections into the future, but China's take up of vehicles with a plug does look pretty straight line at the moment. From 72% ICE market share in 2022, as in Q3, to 65% in the same quarter last year, to 55% in the most recent quarter. So if you keep extending that line forwards, then we're talking about ICE vehicles going by early 2031. And it could be sooner than that based on the regulation that Ben will talk about shortly. Tesla's market share in China is obviously down. It was 13.9% in Q3 of this year, which is down from more than 20% during most of 2021. But that's pretty flat compared with the years of 2022 and 2023. And of course, this is a growing market. So while some of Tesla's wilder sales forecasts are unlikely to be met, it's definitely not a crisis that we're looking at for the company. This is, I thought, an interesting slide that's worth sharing. That's definitely less frequently reported, which is that European and Japanese manufacturers do still have a toehold in the Chinese EV market. They're seeing massive declines in ICE sales, which is driving a fall in total sales as a result. But the EV market share of firms like VW, BMW, and Audi are so far broadly holding up, although whether that will continue as we drift towards the brink of a trade war is another matter. Toyota and Honda aren't really seen as EV trailblazers in most jurisdictions, but they are third and fifth for total EV sales in China in Q3. And Toyota sold 16,000 battery electric cars in China in the past quarter, which is more than double what it's ever sold in total across the whole, the last few years in the UK. So we shouldn't be thinking that EU and Japanese makers have completely lost the Chinese market forever as it transitions. They shouldn't be retrenching and slowing down in the EV investment plans. When you've got a single market which is responsible for 40% of sales and it's transitioning at pace, there's an argument for speeding up. Moving on to some of the other countries in Asia, Thailand is seeing similar trends in the reduction of pure ICE cars, although here you can see that hybrids are picking up much more of the slack. Plug-in hybrids haven't made much of an impact. Battery electric sales are ticking up, but they're still below where they got to in Q4 of last year. It's a bit premature to be talking about some manufacturers packing up and going home, but the market's changing very fast in these countries. And then finally, to review some of the other countries in Asia in our assessment, Singapore is well into early majority territory with market share almost tripling in a year and a half. BYD is the dominant player here, but Tesla and BMW are both also involved and have significant stakes. Taiwan obviously has a very particular geopolitical context, given the fact that it's a much larger and slightly aggressive neighbour, is transitioning at pace, but is continuing to stick around the 10% mark and is starting to see some progress above that. Turkey's taken less time to get to 10%, but it's also wrestling with its own dilemmas nationally about things like flagship brands and tariffs and so forth. The bad news here is really around India, which appears to have kind of stalled completely, with worrying noises from ministers that the market's reached a critical mass and that new incentives to switch aren't needed. I think this chart strongly suggests that they're wrong about that. And so finally, I'll just talk about Europe, including the charge debate, before I hand over to Ben. On the headline figures, as I've alluded to, sales booming in the UK. They've been falling in Germany until recently, anyway, flatlining elsewhere in the EU. The UK has seen this 19% increase in Q3 of the same period last year, and we believe there are two factors really driving this. First, there's the strong zero emissions vehicle mandate, which is driving suppliers to bring the EVs to market that consumers want at the prices that consumers are prepared to pay. And second, there's been a much more kind of positive attitude, even if it's not backed up yet by policy actions by the incoming Labour government. So there's been lots of manifesto commitments about charge point provision and battery certification, a restoration of the switchover date to 2030 from the previous 2035. None of those things have materialised yet, but I still think those have the effect of changing the weather. Interestingly, the UK doesn't have so much of a reliance on upfront incentives other than these preferential tax rates for consumers buying an EV via their employer, but this isn't holding back sales. Whereas the EU is almost the reverse. It has pretty weak supply side regulations this year because it's got a CO2 emissions target, which hasn't really changed since 2021. And most manufacturers are readily beating that now. And it's got a patchwork of consumer incentives, which have tended to operate on a bit of a stop-go basis. And so this seems to be producing slightly stop-go results. With the EU results slipping back as a result of those incentives ending. We don't expect that to last into 2025, as long as the Commission holds its nerve and retains the regulatory commitments that it's made. But I'll let Ben speak more to that. Only to say that supply side regulation is clearly a big driver of the UK's success, and a constant talk of incentives can sometimes be a bit of a distraction. So moving on to just a very quick breakdown of the kind of countries. I try to put these into kind of three tranches. If money's no object, you can still achieve quite a lot with incentives, which is what most of the 8 countries in this chart are showing. Norway and Iceland are obviously on their own separate paths and aren't bound into the EU CO2 regime, but the other Nordic and Benelux countries have shown pretty steady progress with long-term generous incentives. The Netherlands and Belgium are the 3rd and 4th biggest EV markets in the EU now, and they're reaching over 30% market share, which is well into that kind of early majority stage. Meanwhile, there are about 8 more countries with this between 15 and 30%. The UK is ahead amongst the 3 largest markets in this group, so the others being France and Germany, and it's bought more EVs in Q3 than Germany did, but it's behind much smaller economies like Malta, Portugal and Switzerland. There's much more spaghetti and crossover in this section as markets tend to yo-yo a lot more with changing incentive schemes, showing that these are inherently somewhat more unstable than supply-side regulations, which need to be kind of extensively consulted on and planned for in advance. But as I say, we expect that to improve next year. And then finally, there's a whole group of countries, I've only shown a sample of these, which are consistently scoring below 10% and unlikely to improve on that until 2025. Greece, Hungary, Latvia, Estonia and Cyprus all interestingly buy a higher proportion of new EVs today than Spain and Italy, despite all being lower income countries. Italy is an interesting experiment in itself with nearly no incentives, deeply negative public messaging, and the market share is low as a result. Spain has historically struggled, but its sales were up 20% in the same quarter last year, thanks to a stronger incentives package. So we do see room for progress there. And finally, we can't pass over the EU and the UK without covering the vexed tariff question. So after pretty minimal immediate effect, which we think was probably a result of dealers selling existing stock, we've seen EU tariffs start to hit the market share of the top 4 Chinese-owned manufacturers in countries for which we collect manufacturer data, and that includes 4 of the 5 largest car markets. So we're pretty confident about the reliability of our analysis here. MG and Polestar, you can see, have been really quite badly hit in the most recent quarter. Market share tumbling to about 1.5% each in September. Volvo, who obviously makes some of their EVs abroad and some of them in the EU, has held up better. BYD, interestingly, looks largely unaffected and has caught up with MG and Polestar as a result. But it's open to question, I think, about how much long-term effect these kinds of these tariffs are actually going to have. What we're seeing is a very swift readjustment to that. Polestar is reportedly planning to service the EU from the US factories. MG is looking to open plants in Spain. Discussions by BYD are well advanced. And those cars obviously won't be subject to the tariffs when they're built there. EVs that are made by BMW and VW in China and imported back into the EU will still continue to be subject to tariffs, which produces a rather interesting state of affairs. But that's the kind of EU context. What about the US? The major Chinese-owned makers' market shares are holding up pretty well in the UK, as you might expect, because it's not followed the EU into introducing tariffs, but we're not seeing some huge surge either there. If the UK can hold out on its tariff position, it could enter a kind of sweet spot where it keeps prices low for consumers short term, but it benefits from those Chinese manufacturers relocating to our trading partners in the EU longer term. And Europe might actually already be turning a corner as well amidst all this doom and gloom in the European market. This chart shows market share of battery electric vehicles changing by country from August, so from the previous month to September. And I'm just showing this in terms of percentage point increases or decreases in market share. So despite all the policy and media noise, with no new incentives, the step up in automaker duty is still a few months away at the beginning of 2025. Market share did increase in almost every country. So perhaps the targets might not actually be so hard to meet after all, as car buyers recognise the benefit of going electric. And finally, I'll say a little bit about public charge points in Europe. This is an area that was kind of ripe for myth busting, which is why we've homed in on it with a little section here. Some manufacturers in the EU have been kind of casting around for reasons to delay stronger action on EVs, and have hit on some rather strange theories about how the charge point network has a rationale for those delays. All this data in this section comes from the European Alternative Fuels Observatory as well, rather than for the Global EV Tracker. But the essence of the argument, if we can move to the next slide, is that, thank you, it's an analysis of public charge points by country alone shows that most of the public charge points in the EU are in about 3 countries, Germany, France, and Netherlands. There are very few public charge points in countries over to the right, such as Bulgaria, Slovakia, the 3 Baltic states, and others. So the argument goes, we need to pause on the step up in CO2 reductions, which is scheduled for next year. But the obvious rationale for there being many more charge points in countries like Germany, France, and the Netherlands is there are many more EVs there, as this slide shows. Bulgaria, Slovakia, and the Baltics have very, very few EVs. They also have much smaller populations than Germany, France, and the Netherlands. So they have much smaller potential car buying public. And if you show the ratio of BEVs on the road to charge points, you actually find out that countries like Bulgaria, Slovakia, and the Baltics are in fact amongst the best served countries, very high ratios of charge points to EVs on the road. So rather than waiting for, rather than needing EV rollout to pause to wait for these countries are actually in the reverse position, are waiting for the EVs to arrive. So that's a really strong reason against delay. At the opposite end of the scale, you do start to see limitations of this kind of some kind of ratio measure for charge points. Malta looks especially bad here, but as it's an island which is only 17 miles long and 9 miles wide, doesn't really have that many high mileage drivers to cater for, and therefore can get by with fewer charge points. And Norway has a high ratio of EVs to charge points, but obviously is the most successful country of all in terms of rolling out of EVs. What all of these charts miss is the vast number of private home domestic charge points. So UK has more than 12 times as many home charge points as public charge points. So we don't think that's atypical. The headline, therefore, is that assessing charge point numbers without any kind of reference to the numbers of EVs on the road is a pretty bonkers measure. It's much more meaningful to compare the ratio of BEVs on the road to public charge points. That's not a perfect measure either, and there are improvements down the line from organisations like Cenex, which are well worth looking at. But this should help correct that idea that we need to wait for all of Eastern Europe to catch up before we go ahead and start trying to sell more EVs. The next slide rubs that home even more strongly, where you can see charge point numbers are really increasing exceptionally fast. Annual growth rate in public charge points about 44% annually over the past 4 years. Most of those charge points are slow. They're kind of those orange, amber, orange colours there. But bear in mind that the strips, the charge points represented by the dark green and black strips at the top are between 10 and 50 times as fast as the charge points lower down in that stack. And those charge points themselves are increasing in number even more quickly. 350 kilowatt charge points were barely a thing in 2020. There were just over 1,000 across the whole of the EU and across the whole of Europe, and now there are 17,000 today. And then finally, the European Car Makers Trade Body, which has put out some of these arguments, ACEA, has tried to argue that the rollout of charge points isn't keeping pace with EVs. To do that, they often compare the ratio of EV sales to publicly installed charge points, which is a slightly strange measure to start with, comparing a kind of a flow and a stock. But they also choose an exceptionally long time range to attempt to make that argument. If you look at the numbers from 2020, as this chart does, slightly more meaningfully looking at the ratio of EVs on the road to public charge points, you'll find that the ratio is actually improving. It has particularly improved, or it's held steady until 2023 and improved in 2024. And in fact, the EU is ahead of non-EU countries in Europe, such as the EEA countries, UK and Turkey. So just to wrap up, I won't run through all of this because I'm conscious of time, and Ben has quite a lot of really interesting content to get to. But public charge point numbers per country are definitely no guide to adequacy. Public charge points per battery electric vehicle on the road are a better, or they're not a perfect guide. The provision of charge points in Europe is soaring, especially amongst ultra fast charge points. And the ratio overall of charge points to battery electric vehicles is also improving too. There's a bunch of other conclusions on this slide, which really just wrap up the kind of material that I've already spoken to, but in the interest of time, you'll get these slides later on and you can read through those at your leisure. I'm going to stop there, therefore, and hand over to Ben.
Thanks very much, David. And that was a brilliant roundup of everything. And we thought really that given that 2024 is this big year for elections worldwide, and this is we're 12 days away from perhaps the biggest of these elections, at least in terms of the size of the economy. We should talk a little bit about the forthcoming US presidential election, but I'll also talk a little bit about some of the developments that we've been interested in Europe and also in China as well. So with 12 days to go to the US election, we tend to get asked more about what would be the impact of one of these candidates winning than the other, and that's Donald Trump. It's fair to say that Kamala Harris, insofar as she's given an indication of where a Harris presidency would stand on EVs, it wouldn't mean any particularly radical departures from the policies pursued by Joe Biden. But there's a fair few question marks hanging over what a second Trump presidency would mean. So let's have a bit of a dive in and have a look. So Trump has discussed EVs certainly a lot during this election campaign. And in fact, if you could think of an opinion one might hold about EVs, Trump will probably have professed to hold it. So the question is, what, if anything, can we meaningfully extract from his statements on this subject matter? He seems to balance saying an awful lot about how EVs are going to, cause bridges to have to be rebuilt, and they're significantly heavier than, and all of the negative drawbacks associated with the technology that you can read in the media, with praise for Elon Musk as on the other hand. So where he tends to end up in the statements that we've been following is that he will settle on a line that EVs are good for a certain part of the market, as if there is something like perhaps, I don't know, a 10% share of the market that should be for EVs, but no more. And this also often goes hand in hand with a much repeated promise to scrap the mandate for EVs on day one. And he talks a lot about this mandate. So what might this mean for the US and for EV uptake in America? Well, one thing he might mean is the California ZEV mandate, which is a state level policy introduced by the state of California, but 16 other states have since signed up to it, and 10 states have adopted the regulations for trucks. This regulation covers about 40% of the US auto market, and it sets targets, much like the UK zero emissions vehicle mandate sets targets for sales to become increasingly fully electric. Now, he did actually try to scrap this regulation during his first presidency, but never managed it. California also recently won a legal case that reaffirmed its right to introduce this mandate. Lastly, we might also wonder what Elon Musk might have to say about any attempt to scrap this regulation. Tesla have just released new financial statements, but in Q3 of 2024, $700 million of revenue came from sales of regulatory credits, which will be primarily as a result of this scheme. So I shouldn't imagine that Musk will take a very positive view of any attempt by a Trump presidency to scrap this rule. So and of course, California is also, we should say, is taking various measures to Trump-proof its mandate as well. So he could also mean the federal CAFE standards. So these are fuel economy standards set by the federal government for passenger cars and light-duty truck sales. And in March this year, the federal government set out a trajectory for the model years 2027 to 2031. And as you can see from this chart, they will significantly tighten. And by the time we get to 2031, the average miles per gallon of a passenger car will have to be 91 miles per gallon, which is just crazy levels of fuel efficiency. That's likely to require about 50% of car sales to be plug-in hybrid electrics or fully zero-emission battery electrics by 2030. So that is going to drive up sales of EVs. So this could be perhaps what Trump has in mind. There is also a policy he talks about a lot, which is the Inflation Reduction Act subsidies, which, as David mentioned, has offered some pretty juicy carrots for investments in clean vehicle manufacturing in America, particularly in swing states, and that really is a feature of this policy. And there are some estimates that almost 2/3 of the clean vehicle production investment has been in just 7 swing states in America. So perhaps that's why Trump often qualifies how he talks about what he will do to the IRA spending programs. He talks about clawing back any of the unspent dollars from the IRA funds. And so, but that, I mean, that is still fairly unclear. And it seems like it would be pretty crazy to pull the rug from under all that highly politically sensitive investment that's going on in those key states. So I think you could probably summarize Trump's position by saying that he is at least conflicted about EVs. He wants to abolish these supplier obligations. But I guess the question he's going to face is, to what extent are those supplier obligations really important in supporting the kinds of jobs that he doesn't want to threaten and that are in key Republican areas? And to what extent will he need the support of Republican colleagues in order to do that? And ultimately, I guess our view is that where is Trump's messaging on this subject coming from? Is it coming from a profound belief that the gasoline-powered cars are a superior and a better technology for America, or is it more likely a promise made at election time but might be forgotten in 13 days' time? And it's worth remembering we saw a very similar narrative to this, as has been observed in relation to coal mining jobs when Trump ran for election in 2016. As you can see, the decline in coal mining employment in the United States has continued since then as well. So I think we should. It's certainly true that a Trump presidency could have a big impact if it threatens these key supplier regulations, but it's certainly not a foregone conclusion that will happen. So moving on from America, we also have been following the debate that's been going on in Europe around the crisis in the European automotive industry. So European Parliament had a debate on presupposed there being a crisis, talked about the crisis in the automotive industry. But of course, as David pointed out, EV sales are also growing as a share of the market in Europe too, despite the withdrawal of subsidies by certain member states. The withdrawal of those subsidies means that there is more pressure on the automotive companies themselves to bear the cost of transitioning to lower emission vehicles. And that is primarily being driven by the EU's supplier obligation, which are these CO2 performance standards. And they featured heavily in this recent European Parliament debate. So let's do a quick tour of what was said. I'll save you the joy of reading through the debate yourself. And we've grouped the stances taken by MEPs into the following categories. So we've got, firstly, the Unhappy Family, which is the European People's Party. They are the main centre-right political party in Europe. And they include the relevant Commissioner Valdis Dombrovskis, who opened the debate by saying that it was the Commission's view that the car makers' difficulties at the moment are essentially down to lower pre-pandemic levels of vehicle sales than has lower post-pandemic vehicle sales than has historically been the case. That view was not shared by his colleague Jens Giesecke in the who's one of the German MEPs in the EPP. He was asserting that charging infrastructure is holding back EV sales, that EV sales are falling internationally, as we've seen from David's section. That's not the case. He called for the EU's 2035 ban to be lifted and for a review of these CO2 standards that was due to take place in a couple of years' time to be brought forwards to next year. Other MEPs in his party also made similar calls, largely often led by the German contingent in that group too. So the EPP are very divided on this issue. The next stages from this debate are that Jens will probably play quite a key role in drawing up a draft resolution that the European Parliament will subsequently have to agree on. Next, we have those who are offering some defense of environmental standards, but it's not exactly full-throated. So we have the next biggest group in the European Parliament, the Socialists and Democrats, and we also have a Liberal group as well, Renew Europe. They generally called for environmental standards to be maintained. One Swedish Social Democrat had a very creative way of putting this and said, weakening environmental standards is like peeing on yourself in winter to keep warm. It may work in the short term, but soon it gets so very cold. However, his colleagues were not so full-throated in their defence, and many of them also called for the review of the CO2 regulations to be brought forward to 2025. Which of course raises the risk of there being a moment when they could be watered down. The European Commission's perhaps best ally in the debate came from the Green Party, perhaps surprisingly. The Greens were the most full-throated defenders of this regulation. And almost uniformly were defending this, blaming management decisions taken by the European automotive manufacturers for the current challenges that they face, or for post-pandemic changes in travel patterns and car ownership levels. Then we have some of the smaller parties, including three far-right groups, the Patriots for Europe, European Conservatives and Reformists, and the Europe of Sovereign Nations group. They almost universally called for the scrapping of the 2035 phase-out date, and also for either significant revision or abandonment of the CO2 regulations altogether. And then the party of the left, I would say, blamed the European automotive industry for its own crisis largely, and also for producing too many luxury electric cars and not enough mass market small cars. They also had an official call for Europe to pass a law against any job losses in the automotive industry. So fun and games aside, I guess the question is, where does this all leave Europe? And I would say Europe is still quite divided on its CO2 standards. And there has been some effort made amongst the member states as well to change standards. Italy has put forward a non-paper which proposes some redefinition of the calculation model in the CO2 standards to allow other technologies such as e-fuels to be included, but also to move towards life cycle emissions. And also to bring forward the review of the regulations. And that has received some very lukewarm support from French government ministers who have expressed concern about the level of the fines that companies might face under the regulations. Although it's fair to say other member states have not shared that view, and the European Commission is certainly not sharing that view either. So I guess I would sum up the position on Europe by saying that whilst the noise is building, it does seem unlikely there's going to be any successful efforts in the immediate term to change these regulations. But we are a little bit interested in the potential for an earlier review of the standards, which would provide an opportunity for that to happen. Moving on, I'll just briefly cover the UK. The UK has had a similar kind of debate going on around its zero emissions vehicle mandate. This is a much more ambitious policy than the EU CO2 standards. But however, unlike in Europe, the automotive industry in the UK is not calling for a revision of these rules. They are just calling for more subsidies from the British government ahead of the budget at the end of this month. I think that actually offers an interesting lesson for policymakers, which is that there are many automakers in the UK which are quite far advanced in their electrification, and they now stand to benefit from the ZEV mandate. They will generate revenue from the sale of regulatory credits, a little bit like we've seen Tesla in California. That actually helps build important political support for these regulations from within the industry. So I think, yeah, that's a really interesting lesson that policymakers can draw. Just before I finish, I want to talk briefly, step away from the politics a little bit more into the policy. Some interesting developments going on in China relating to their fuel economy standards. China has just finished a consultation has just closed rather on proposed new standards for passenger car CO2 limits in the second half of this decade, which include a fairly significant tightening of the target in 2026. We think that's about 12% tightening of the target then, and then getting progressively tighter and tighter towards 2030. As interesting as the rules themselves, I think it was actually the Chinese government's statements around the rationale for tightening these rules. There's the usual thing about reducing import dependency. We know China has a 73% dependency on foreign oil, as well as the Chinese government's plan to peak China's emissions by 2030. But perhaps most interestingly of all was the fact that they had noted the tightening of standards in the EU and the US. And the fear that China might actually fall behind those jurisdictions on their journey towards electrification. So what does this all mean for everybody else and for Western car makers? Well, one thing that jumped out at me was this analysis of improvements in Chinese made vehicle fuel efficiency over the last 5 years or so, relative to the vehicles that Western and other car makers are selling into the Chinese market. They are not keeping pace with the improvements in fuel economy that is being made primarily through electrification by Chinese domestically produced brands as well. So this is likely to make the situation worse for third country car makers selling into the Chinese market if they cannot bring to market mass popular electric vehicles. And then lastly, just to finish, just a look at where the Chinese standards sit in relation to the US, EU and Japanese standards. As you can see, they all follow a fairly similar trajectory. So this is quite a sensible change from China, quite pragmatic, we see. And it really highlights how the EU's standards are quite different now from the approach taken by China and the US, which have a yearly stepping down of the CO2 levels that are allowed from newly registered cars. The EU pursuing this 5-yearly flat line, which then drops off significantly by 2030. So I will leave it there. I think we're going to take some questions if we have any. So do pop them in the chat. Yeah, brilliant. Over to you, I think, Harry.
Yeah, thanks, Ben. Yeah, that's excellent. Thanks very much to you and David. We've got some questions that have come in over the past few minutes. Let me take them in order. There's one from Alan. No other name there. I'll just read it out, and I'm going to pass this one to David. So I'm giving you the kind of heads up you'll be answering this. There's a second one from Sarah Chada from the Climate Group EV100 that probably Ben will pick up, and then we'll see what other questions come in as it stimulates. Okay, so Alan asks, how do different countries compare on info for consumers on charge point locations and availability? Is there a single ground truth system, or is it just random via multiple apps, and which is more successful? David, can I pass that one to you, and then we'll pass Sarah's question to Ben. Thank you.
Yeah, you can definitely pass it, Harry. It's a great question, Alan. I don't think I'm going to have a particularly helpful answer on it, but it certainly does stimulate some thought about whether this is a potential research area that we could look at. I think the challenge is sometimes trying to measure kind of success here. I think we've probably all seen those polling questions where people get asked like, what's preventing you from buying an EV, and the kind of, oh, there aren't any charge points has become almost like a stock response that kind of the people mistakenly, I think, attribute huge amounts of weight to. That's I don't think it's particularly clear that those views are particularly strongly held. If when people are next thinking about buying a car, and their salespeople start to talk to them, or they're start to do their research and find out about home charging being providing such a large proportion of their mileage, then those kinds of concerns sort of fade away. So trying to measure, I suppose what we're trying to say in a rambling way, is of trying to measure public concern about charge point provision is quite tricky. And in many of the countries of the EU, it's particularly hard to reach EV owners because there isn't a very high percentage of them. You know, they're less than 0.25% of the cars on the road in some of the Eastern European countries. That said, I suppose my gut instinct on your question would be that there are some pretty simple kind of low cost, low regret things that governments could do and haven't always done. So trying to tell people more effectively by, for instance, mandating motorway service operators to tell drivers about the availability of charge points just starts to kind of prompt that thought that as you drive past exits to service stations that there are charge points there, even if you weren't particularly looking out for them and you happen to be driving an ICE vehicle at the time. It just starts to embed these in the public consciousness, and I think that applies to charge points elsewhere with regulations about more prominent signage. To be honest, you know, one of the most, and obviously I think a purely app-based approach is really good at speaking to the people who are already on board, but people aren't going to start downloading ZapMap or the Electroverse app until they're at least at the very minimum seriously minded to do some research about switching to EV. So trying to embed these things into the kind of public consciousness in a low cost way is probably a good way of kind of building up that confidence. But yeah, great question. Not a complete answer, and certainly something that we'll continue to think about and consider whether we could do a bit of research on.
I'll just add,
Thanks,
David. Sorry,
Yeah.
Harry. Yeah,
Yeah.
I'll just jump in because
Yeah,
you know,
sorry, go ahead.
It's a really, really good question, and I think it is something that governments are starting to think more about. I mean, we've got some regulations coming to force in Europe. In the UK, I think from next month, at some point next month, there'll be a requirement for charge point operators to make available standardized open data and on charge point availability and utilization, and I think that will also similar but effectively equivalent regulations come into force in April next year in continental Europe, in the EU. So I wouldn't be surprised if this is something that, as the number of plugs globally grows, if there are not standards in place, this will be something that policymakers will increasingly ask of the operators of it.
Thanks, Ben. Yeah, I mean, it looks like the UK actually taking a leadership role in this one. Interesting. There's two. Sarah Chada has sent in two questions. Ben, if I can put both to you, I think you've seen them. For the rest of the audience, just quickly read them out. Thanks a lot for the analysis. The slowdown in EV sales in the EU in 2024. Can we say that there is a threshold effect orchestrated by OEMs who want to sell more EVs registered in 2025, either sort of game playing a little bit to make it count for their corporate average fuel economy CAFE in 2025. So could you say, do you think that there'll be a bit of a bump in 2025? And there's an ancillary, I think, that Sarah asks, do we have data on the share of company cars, fleet cars, I guess, and all that amongst, that fleet private sales thing that the SMMT has raised amongst the various drivetrains, ICE, PHEV, BEV sales? So not an easy bundle of questions there from Sarah, but Ben, over to you.
Yeah, sure.
Good luck.
Sure. I mean, I think given the size of the threshold in the EU emissions target changes, it would be surprising if there was no effect of a change in that level. Whether or not that is down to the car makers sort of timing their deliveries, or whether that is down to simply the timings at which models are coming to market, because these regulations have been in force for a long time, and thus car makers can make plans around them. I wouldn't particularly like to speculate. It's worth saying that the 2025 step down in the EU target, at least, is actually not as significant as some of the other steps in that regulation. But we would expect it to place a fairly significant new requirement on the manufacturers. So we'd hope to see much higher EV sales next year in response to it. And then to answer Sarah, your second question as well, it really varies from market to market, the amount of data that we have available. So Yeah, we might well do. I would suggest get in contact with us afterwards, and we'll see if we can have a chat about that.
We have an extra question coming in now as well. Ben, I'm probably going to suggest if you could answer this one. From anonymous. So we will accept from anonymous, but what are the prospects for the used EV market? Which is a good question from anonymous.
Sure. Well, I suppose it depends in
Or
which.
to
Yes, I suppose it depends slightly in which country we're talking about, but I think in general we're seeing used EV markets going through the usual sort of stages of the initial development of a new kind of market, which is that you have new products coming in, the prices are still being kind of discovered, and that will cause some fluctuations in those prices. In more advanced markets, EVs tend to the depreciation rates that are emerging are a little bit different to ICE vehicles, in the sense that if you have a petrol car, then it's going to lose value fairly consistently, well, fairly quickly initially, but then consistently after that initial loss of value. EVs, it looks like they go through quite a big loss of value in the first few years, and then they hold their value for a little bit longer. That may reflect the fact that actually batteries are lasting longer than people thought, and that the maintenance, because they are mechanically simpler, is less when the cars get older and older. That would be great news for the vast majority of people who buy their cars secondhand, if it's the case. So yeah, I don't know what else to add on that, David. I don't know whether you've got anything you would like to say on the used market.
I'm just going to say one thing in a EU context, which is quite interesting, is that the countries which have got the very high market share in terms of purchases of new EVs are also tend to be the countries that that have the kind of fastest churn, the lowest average age of electric vehicles. And so one thing that we shouldn't lose sight of when there's wailing about low take up in some of the lower income countries of Eastern and Central Europe is that the EVs which are being bought today in Belgium and in Sweden will eventually find their way to those countries. Luxembourg, I think, has a I'm going to forget the statistic, but Luxembourg has a rate of kind of a churn of vehicles, which is astonishing. Romania and Bulgaria, buying new cars is actually quite rare, and so we shouldn't always invest too much importance in the headline sales of headline percentage market share of new EVs. We'll be really interesting to track how those EVs cross borders across the EU, which will ultimately, I think, we think result in those countries catching up in terms of the percentage of vehicles on the road.
Thanks, David. I mean, Ben, David, is there any other sort of concluding remarks you'd want to make, given what you presented, or the questions that have come in? And then I'll just start closing things down and letting people know how they can get access to all the information.
I was just going to just add one thing on Sarah's first question, which I mean, I think, just to agree with Ben, I suppose I agree that it'd be reasonable that you'd expect that threshold effect for sales to dip in the run up to the end of 2024, to people to hold sales back. But obviously, what's interesting in the slides, in the analysis that we did, that I presented, one of my slides came from this analysis, showed that in fact EV market share is increasing at the moment. We're still far enough out from December that we could well see that the sales begin to be kind of artificially suppressed in November and December. But right now, it's a really interesting fact that amidst all that kind of turmoil, all the kind of negative messaging and the crisis that debates that are taking place in the European Parliament, actually the share of EVs is going up in almost all countries. So who knows what we're capable of when manufacturers have got proper incentives to sell them.
Yeah. Ben, any other comments you want to make?
No, I mean, I think we've probably been with the EU market, we've been a little bit surprised at perhaps some of the price points that some of the products the EVs are coming in at, and hopefully, I think one of the things I would hope to see from next year as a result of the change in the emissions target is perhaps a little bit more of that being reflected in the prices of EVs from the manufacturers. So yeah, I think we're certainly very optimistic about the prospects for next year. So perhaps that's a good positive note to end on.
Yeah, thank you for that, Ben. Yeah, I guess maybe 100 years ago, if we had this webinar, there'd be horse and cart holdouts that would have been saying it's never going to happen. And it's like, well, you know, how did that work out for them? So I think you're right. I think we behind behind the curtain of New Automotive. I think we're very confident that this, yes, there's bumps in the road, ho ho, but there's going to be, you know, you can see the direction of change, and there's much opportunity here versus the issues that we're seeing. Thanks for joining us. You can contact us, as you can see on the screen there, at general@newautomotive.org. As I've mentioned at the top of the hour, this recording will be there. We've got other products you can read there. We've got open information that are there. You contact us there if you want the API to look at this data in more detail and manipulate it yourself. We will be coming out every month, obviously, with our global updates, UK updates, European updates on all this data, and we'll get it out there as fast as we can, and you'll get open access to it. It's always going to be free, as is our mandate. Thank you very much for participating. Thanks to Ben and David for their efforts here. Thanks to the team behind all of this that you've seen and putting this together. And thank you all for joining us. And please feel free to get back to us, and we'll have the next webinar soon in our quarterly update next time. Thanks so much for your time. Thanks to everybody, and have a good day.
Cheers. Bye.